Well, hey there, and welcome back to your favorite real estate channel, the dynamic duo of Heather Roda and Colin Broadwater. We are joined by Ken Neat, our favorite mortgage lender today. And today we are going to do a quick look back at what happened in 2024 and just kind of breathe a sigh of relief that it's over, because it was just kind of a tough year in real estate. We're going to look forward as to what's happening in 2025, give you some projections and kind of just talk about what we think might happen, and then we'll follow that up just with a quick legal update, some important changes to what has happened in California law. And so we'll bring you up to speed on all that business.
Yeah, so stick around to the end, because the new laws, some of them might affect you, whether
Indeed.
You're buying or selling or not.
Yeah. And so, let's jump right into what the heck happened in 2024. We had a big lawsuit and settlement. Everything's the dust is all kind of settled there. We had a presidential election that was super contentious, and people are just kind of glad that that is over. We can put it behind us, I believe. What else happened in 2024? We saw prices rise, stay flat, and go down, depending on kind of where you're at in the real estate market. And what else happened in 2024? A whole bunch of stuff happened.
Nothing else
rates.
we need to put in this video. Rates.
And as far as Ken is concerned, we're a little disappointed in what we saw in the mortgage world, in that we were expecting several stair steps down regarding rates, and we pretty much we came down a bit, I guess, but just not nearly as much as we expected.
We had a good little blip in September, but it was short-lived.
Yeah. So what do we want to touch on here as far as 2024? We want to dive in a little bit deeper here. What the heck happened, and why are we so relieved that it's over?
So should we start with the lawsuit and just let everybody know where things sit now, just a simplistic version of where things sit? So the lawsuit against the National Association of Realtors, the final settlement took place a couple months ago, and it looks like the Association of Realtors believes that we're not going to see any more major changes. So in our recent videos about the topic, we were saying stay tuned, things will probably change again. Now it's looking like that probably won't happen, and what we're seeing is that sellers are only going to be agreeing to how much they pay to their agent, the listing agent, upfront at the time of the listing. Buyers are only going to be able to see property with their realtor once they select their realtor and sign an agreement. There's a few little nuances to that, of course, and the other change that we're seeing, quote unquote change, is that sellers are still basically paying for both realtors in the end. It just functions a little bit differently, with the buyer usually submitting their offer and saying, hey seller, will you also pay my realtor? So that's kind of it in a nutshell, and we're not expecting to see any major changes with that.
So the big kind of anxiety around that settlement was that it looked like, from an outside perspective, if you weren't kind of following really closely along and kind of knowing the way the real estate world works, is that buyers were potentially going to be responsible for paying the buyer's agent commission, which means they were going to have to come up with a whole bunch more cash up front in the transaction, which is not exactly what people are interested in doing when they're going to buy a house, is find a way to bring in, another large chunk of cash up front. But that's not the way that it's played out.
Yeah, and it's interesting. We went to our legal update with Gov Hutchinson with the California Association of Realtors. What he said was, really, buyers have always been the ones that are paying it, and they're still paying it. So that's not the way that it looks on paper. But his point was, sellers are not writing a check to the realtors. They're not coming out of pocket to the realtors. It comes off the seller's net. But all of the seller's net is from money that the buyer pays into the transaction. Yeah. So buyers, now that they have to sign an agreement and they know how much their agent is getting, which that's all good. We needed more transparency. They understand that they're writing their offer for a certain amount above what they would pay without a commission, and that chunk is going towards the commission. So I think there were a lot of scared realtors that commissions were going to go way down. There were a lot of scared buyers that they were going to have to pay, but the reality is that the market has bared out payment to realtors because of what we're worth, and that buyers are not always able to come up with that money up front. And so it makes more sense in most cases for the seller to pay it. So those two things have not experienced the change that people were worried about.
Right?
Yeah. So moving on from there, I think the next big thing that people, a lot of the talk it's been about rates. And so we've been kind of like, just like feeling stuck, just like ready. I've had a couple of times when I'm like, okay, like here it comes. Rates are going to come down. And then lo and behold, it's like, oh, the Fed cut rates. Oh, but
Right.
mortgage rates went up. And anyway, so what the heck's going on?
Yeah, they ended up just kind of being flat, which I know isn't super newsworthy from that standpoint. We did have the Fed cuts, 4 or 5 Fed cuts, but they didn't really translate to long-term interest rates coming down. The September 18th Fed cut of 0.5%, the market was anticipating that, and rates got really good about a week or two before the cut because it was anticipated, and then for about a week after the cut, and then there was a sell-off in bonds, and when bonds go down, mortgage rates goes up. And that's the old-fashioned seesaw relationship for investors, either investing in bonds or in stocks, where stocks and bonds compete for the same investment dollar. And when the general public thinks that the Fed is stimulating the economy and stocks are going to take off, it's at the expense of bonds. So money comes out of bonds, goes into stocks, and when bonds suffer, rates go up. So we had that old-fashioned seesaw relationship kind of hurt us that time. And then again on the December 18th meeting, they cut a quarter, which was also anticipated, and rates got worse again after that, which is just counterintuitive to what the press puts out there.
Yeah, it's counterintuitive to what we were hearing from everybody. The expectation was coming down from all sources at the beginning of last year that rates were going to come down quite a bit, and just didn't happen. So we're going to get into 2025 projections in a minute, and hopefully those are going to be right this year, because last year they were wrong.
Would you say that the main driver in rates not coming down is just due to inflation not quite being where we want it to be, or do you think there's
Definitely, I think it's two big aspects: is employment and inflation.
Okay, so employment numbers kept on saying better than expected.
Correct.
And inflation kept on kind of just being stubborn and kind of hanging out.
Right. So the word they like to use is, it was sticky. Inflation was a little bit too sticky. It didn't come down as fast as they wanted, but it is going the right direction. And unemployment, I should say, is going the wrong direction, but that does help rates. So they've painted a picture of a very soft landing, and every month when the job numbers come out, and then they revise them the following month, we get a real picture of Warren as rosy as the original report, but the market shakes it off. They've been overestimated by about 100,000 per month for the last year, and the market still shakes it off. And there's obviously a ton of closures for major businesses last year. So that unemployment number is probably still a little skewed, and they think the inflation number, the PCE, personal consumption expenditure, which is the Fed's favorite measure of inflation, is inflated by about 0.5%. It's currently 2.8. They think when they strip out the certain items, it's more like 2.3, which is a lot closer to their target of 2%. So when they get to 2%, that'll be neutral, where they're no longer cutting rates or increasing rates, to accommodate the economy or restrict the economy.
Gotcha. I know you could just keep going with information. It's incredible what Ken can do.
Like
just
lender nerd talk.
Bam,
Call
bam,
Ken.
it just keeps coming. But I do want to come back to Heather here because
Realtor nerd talk.
Kind of in the beginning here, I mentioned that prices had gone up, stayed flat, and come down. And what I was referring to there is that kind of like the median price. We were just saying it's about the same as it was about a year ago, right? But if you look at kind of like the average price, lower end home, you actually see those prices have come up a little bit, but then the higher end prices seem to be kind of just like trending down a little bit. Like if you own a big ranch and you bought it just a year ago, you're probably looking at your home value and going, it's just that there's just not as many buyers in the higher end market, and so we're just not seeing those prices kind of trend up. Anyway, where are we at with?
Yeah, so median
stats.
price for SLO County residential, according to our local MLS, is $875. So we kind of started the year out last year with about 6 months of inventory, and we have about that now. We started the year out just a little over $875, and now we're just under that. Our days on market has creeped up, so we're seeing inventory creep up in some other areas, and our days on market is longer than it has been, still at 26. And then the number of sales last month was 193. So we saw low sales consistently throughout the year last year. So our local market, there's not a whole lot of news there, except for like what Colin was saying, that there's a little bit of differential depending on whether you own property in the higher end or in the median or starter range. One of the things that was interesting on the national level is the change in the demographic for buyers, which is a bummer because we want to see more young people being able to buy. But what we saw is that the median age for first-time home buyers actually creeped up. And so first-time buyer median age now is 39, where it used to be 36. And then the median age for all buyers is now at 56. And that used to be at 49. So an older buyer demographic. And Ken might even have some more nerdy numbers for us on the nitty gritty.
The good news though is that we're all living so much longer these days. Everybody's so much healthier.
So
medical technology has come so far.
what you're saying is
that don't worry, you're going to live so much longer.
56 is the new 49?
56 is the new 49, exactly.
So not to just jump ahead into the 2025 predictions, but maybe a little bit of that. So you have some numbers on the homebuyer demographics for projections for 2025. So give us that info.
You bet. So the biggest segment is still millennials, ages 23 to 40, 28 to 43. The current homeownership rate for those millennials is 45%, but that homeownership rate when they were 30 was 33%, and that homeownership rate when they were 40 was 55%. So that segment is going to continue to grow. The Gen Z is only 12 years old to 27-year-olds, so there's obviously not a lot of 27-year-old buyers. There's only 8% in the market, but as they go from 8 to 33 when they're 40, meaning 33%, that's 17 million new buyers in the next decade from that demographic. And 22% of that 73 million for millennials as well. So when we look at the supply versus demand on housing and trying to time the market and wait for prices to cooperate, it just seems really unlikely when we have so much demand and supply, falling short.
Yeah, the inventory has to remain low with that many buyers coming into the market because we're not building enough housing to offset that. So that means
haven't heard of any projections coming from any segment of government or commerce or anything that all of a sudden there's going to be this massive boom in new construction. Certainly not in California, So
no, the percentage of new builds, so obviously we're dependent upon resales, and we need rates to help unlock some of those resales. And I think the magic number that I continue to read about is getting rates under 6, in the 6s, in the 5s, so that we can then employ buy downs, temporary buy downs, things like that to help unlock some of that inventory where that homeowner is like, okay, I'm not going to give up my 3 1/4, go to 7 1/4, but I'll give up my 3 1/4 and go to 5 1/4.
When's that going to happen? Don't we wish we knew? But what's the latest projection for when that's going to happen?
Well, they think that the spread between the 10-year and 30-year mortgages is traditionally right about 2%. Right now it's like 2.5%. So the 10-year treasury right now is 4.6%. If you added 2.5 to that, you're at 7.1, which is not too far from where rates really are right now. They think that spread will shrink to 2 1/4, and that the 10-year treasury will go down the full point, because as the Fed does their 4 cuts, if they do 25 basis points each cut, it'll go from 4.6 in theory down to 3.6. Then if we subtract that 2 1/4, which is the spread, mortgage rates would be 5.85. So I know that's still higher than we all were crossing our fingers for a year ago, but now that it's kind of settled into being the new norm and consumers have had to deal with it, and we've all had to deal with it, anything that starts with a 5 sounds really good to me.
Yeah, those are the same projections that we've been seeing from the economists that we follow too. And the projections that we've seen on number of sales and price are about a 2% rise in overall values for the entire year. That's from National Association of Realtors, Lawrence Yun, and about a 9% increase in the number of home sales for 2025. So we'll see.
Will be interesting for sure.
So I think we did cover everything as far as 2024 goes, except for the fact we didn't really touch much on the presidential election being over, but I don't know.
Yeah, that's just really the only thing is that we consistently see, because we're not trying to get political with our channel ever, the only thing that we see consistently is that with the indecision, or not the indecision.
Uncertainty.
With the uncertainty from elections, we see people kind of freeze up. And so we see less activity in the market right before an election. And we are seeing that even more and more. So the projection for the higher number of sales for this year is partially due to the fact that that's all over now and that people are less worried about what is going to happen. That the uncertainty is usually a bigger worry for people as far as their decision-making behaviors and taking action than whether or not their candidate won or lost.
So as political as we need to get is that if there's less politics going on, the real estate market tends to have more activity.
Yeah.
That's about it. Cool. So 2024, it's gone.
Goodbye.
2025, here we come. We don't know exactly what's coming, but here we are. We're diving right into it.
Well, when we talk about inflation and jobs having the biggest impact on long-term rates, one of the things that I thought was very interesting in one of the updates that I get, which I have to give credit to Barry Habib and Morgan MBS Highway, because that's where I have followed them for 20 years and not going to pretend all of this information I compiled myself. But one of the charts was talking about unemployment, and closings in 2024 were up 70%. So the list was pretty crazy. Big Lots closed 580 branches. Family Dollar closed 700 branches. CVS closed 900. Advanced Auto Parts closed 727. Walgreens closed 1,200. Macy's closed 65. American Freight closed 353. 7-Eleven closed 492. And there's a stack of them, to not bore you, but that's a lot of unemployment to still hit numbers. And that's where I feel like every month when we get the numbers out and then they revise them and they get a little bit more true and the market shakes it off, it's not a soft landing for employment. It just hasn't caught up to us yet, in my opinion.
And that is expected to be good for rates.
That will help
mortgage
long-term
interest
rates, correct.
Yeah, and we give credit to Lawrence Yoon and Brian Buffini, our two primary sources of information.
Yeah, so overall business closings were up 70% compared to 23. So in 24, there was 70% more business closings than in 23.
That's a big number. So just to clarify, that should be good for mortgage rates, though. So when the job market gets hit hard, we tend to get better rates.
Right, that's when the Fed becomes accommodative, meaning cutting rates to help stimulate the economy. And that will motivate them to stimulate the economy if unemployment continues to rise.
Okay. So any other thoughts on what's coming in 2025?
We have new laws.
New
we
laws.
can jump to the new laws.
Okay. All right, let's do it. New
Okay.
laws.
So obviously the biggest one we already talked about, settlement was finalized. Don't need to bore you with any more of that information, but some other real estate related happenings with lawsuits. It was interesting information that was given to us by an attorney that they believe that there will be some lawsuits around the Zillow touring agreement, which we're not really familiar with since we don't use the Zillow touring agreement, but that should be interesting to watch this year. And we always do say that the A in Zillow stands for accuracy, so that's how we feel about Zillow in a nutshell. So that's part of what will make it actual fun to watch with what happens with that.
Zillow is great. Just if you use Zillow, it's a fantastic tool. The accuracy of it can be a little bit.
Yeah. It's very user-friendly, we'll give it that.
Yeah.
But some other real estate related laws, there's a new balcony inspection law that takes effect just took effect as of this month. So any properties, individual apartment buildings, or condo associations that have 3 or more units that have balconies that are at 6 feet or higher are now subject to turning in an official inspection to the state of California to make sure that those balconies are safe. So that could affect any of you that are part of a condo association, especially that has that many balconies. That needs to be handled by the association.
Fantastic. So now we need to know exactly what the definition of a balcony is, right? Like, what if they have a deck?
Oh, they have. There's a definition of what the balcony is.
You're gonna want to know.
And pretty much anything that overhangs like that is
Okay.
like it.
balcony?
Whether your association calls it a deck or a balcony, if it's overhanging and meant to be
Stood on.
yes,
Got
then it's going to be subject to that.
So decks and
inspection.
balconies.
No associations are going to be able to say this isn't a balcony.
This is not a
This is a hovering patio. So that's one. And then there were a ton of new laws related to rental property. So This is for anybody in your life that is a renter, or if you own rental property as the landlord, you'll want to know what the new laws are. And there were quite a bit of them, and we're not going to bore you with all of them in this video, but you can reach out to us anytime to find out more. So we think the most notable one has to do with tenant security deposits. So this is for new leases that took effect 1/1/25 or later. The only way that a landlord can retain any portion of the deposit is if there are before and after pictures. So move-in pictures and then photos documenting either the damage or the lack of cleanliness. Otherwise, that money goes back to the tenant, no matter what they did or didn't do to the property that they had agreed to.
Kind of like renting a car, right? Got to go out there and like document how the car looks before you take it away. So,
I don't know. I don't know anything about car rentals. One trick pony over here. Real estate.
I wonder how much of an effect that'll really have, you know? I mean, it's always contentious when someone moves out and you can't get your deposit back. Like, what is the recourse of action for a tenant to actually go sue to get it back, or what?
They should be able to just walk into small claims court now and say,
yeah.
where's the before pictures?
Yeah.
And that'll be the end of it. Yeah, because that's part of the law. It doesn't matter if the landlord can prove that they completely soiled the carpet or they had a dog there when they weren't supposed to have a dog. They could have a mountain of evidence, and without the pictures, they cannot keep it.
What's the legal limit for small claims court? How high can the
I think it's like 15,000 these days, but I'm glad to not know for sure.
Yeah.
I don't know how high that is. I would think, and I'm not a landlord, but I would think that a landlord that's learned once the hard way with the tenant probably takes pictures anyway. So the fact that now it's a law, is it going to be a big change?
Yeah.
Yeah, I don't think it's
just make it easier. Like for
a
a tenant, they could just go and win.
Yeah. I don't think it's a huge change nationally, but if you're that tenant or that landlord, that either the landlord's trying to keep your deposit when it's due back to you, or the tenant destroyed your place and you want to be able to keep all of their deposit, then I'm thinking it's probably a pretty big deal to you. So, and it's not something, you know, the way our news media is set up these days, it's not something that we're seeing in the news anywhere. Right. So you've got, you know, millions of tenants and landlords all over our country, and nobody knows about this stuff.
Yeah.
Cool. Well, that's where a consumer needs a little guidance from somebody, because if you haven't rented before, or you have and just weren't able to take a picture or didn't think to, that's going to be part of your moving process now.
Yeah. Yeah. Okay, so I think that about covers it for what we wanted to get to for today. So wrapping it up, Heather, what should sellers be prepared for in 2025?
I think for sellers that 2025 is going to feel very similar to what they might have experienced in the latter half of 2024. And I only say that because of the lawsuit. So it's change in your paperwork with the way that the compensation structure flows, and not much of a change in your days on market or your competing inventory or anything like that.
Is now this year, like this is the year to sell, like we're at a high point and prices are going to come down, so if you want to get the most for your money, then 2025 is your year to sell, or anything like that?
Well, we're not seeing any predictions of the market having some kind of a dive, so I don't think that means that hurry, you need to sell or you're going to lose a bunch of money. Yeah. But sometimes I hear sellers that are kind of bummed, like I was really hoping values would go up. Well, 2025, the anticipation is that the prices are going to go up on a national level 2%. So 2% higher than last year is higher than any other year we've ever had. So you could have sold your house in 2018, 19, 20, 21, 22, 23, 24, and it would have been less than what you'd sell it for in 2025. So,
okay. Yeah. So get ready for more of the same. And Ken, same question for you, but for buyers, what should buyers be kind of like looking to see and be prepared for this year?
I think having your ducks in a row so that you could act quickly on a property and be able to have really strong terms with a quick close and few contingencies, if any, et cetera, which is the same strategy we've been employing. And then I still think time is the enemy. You know, it's not original for me. I stole it from somebody, but it's not timing the market, it's the time in the market. So the sooner you buy, the sooner you start to appreciate. And I could do a ton of different rent versus own examples.
And you're actually paying your mortgage down instead of throwing your money away on rent.
Correct. So. And appreciating.
Yeah.
And the tax credits.
Yeah, I saw the analysis of cost of waiting on, say, a $500,000 house with a general 10% down payment and the 5% appreciation that it's anticipated to get. Well, 4 to 4.5 nationally is what Barry's site is saying. And including the cost of a refinance when rates came down, and they were still ahead by $30,000 in the first year, assuming they refinance, paid $3,500 to refinance, dropped their payment by a couple $100, and appreciated, to the tune net of $30,000.
So it's basically, don't let anybody tell you not to buy or sell this year. You should make the decision based upon your life and what
100%.
what your life goals are. And on the flip side of that, for sellers, don't let anybody tell you to hurry up and sell before you lose a bunch of money, because we don't see that coming. So
At all.
Yeah. And reach out if you have questions for buyers. Like, knowledge is power. If you don't know exactly where you stand as far as your ability to buy a house, then it's hard to make good decisions. And sellers, it depends. Like, it's our county is pretty specific, right? So like different towns, different property types are gonna they're gonna yield different results when you go to sell them.
And if you're watching this video from out of the area, click the link below for our free relocation guide. We would love to help you with more information on our local area, and Ken can definitely help you anytime with figuring out what you qualify for if you're looking to buy this year.
Before any of us keep talking, we're going to wrap it up. Thank you. We'll see you in 2025. Thanks for joining us, and we'll see you in the next video.
Bye.
Bye.